Hello everybody, Keith Collins, Alpine Mortgage Planning. I hope everybody had a great weekend. Got a big update for you, actually 4 big updates, so please stay tuned. I try to keep these short, but this one might run a little long, but it's, I think, very valuable information. First, the big kahuna here. Standard & Poor's over the weekend downgraded U.S. Treasury debt from its AAA status, which is its highest rating, to a AA+. What does that mean? I'm going to talk about it a little bit, but what I find most interesting is the actual statement the Standard & Poor's makes after their downgrade. The downgrade reflects our opinion that the fiscal consolidation plan that Congress and the administration recently agreed to falls short of what, in our view, would be necessary to stabilize the government's medium-term debt dynamics. More broadly, the downgrade reflects our view that the effectiveness, stability, and predictability of American policymaking and political institutions have weakened at a time of ongoing fiscal and economic challenges to a degree more than we envisioned when we assigned a negative outlook to the rating on April 18, 2011. So Standard & Poor's downgraded U.S. Treasury debt from a AAA status to a AA+. Traditionally, interest rates would be moving up at a time of this downgrade. I read this today and I found it very interesting, kind of funny. Even though our fiscal house is far from being in order, we may still be the cleanest dirty shirt in the laundry. And I think that's kind of what's happening here is, I've said this before, our interest rates are low right now because of the problems that Europe's having with their bond. As soon as they get that figured out, or the euro, as soon as they get that figured out, our interest rates will move up. So that kind of goes to the cleanest dirty shirt in the laundry. Yes, we're having problems, but we're not the worst of it. And so when investors are looking to park bonds or park money in bonds, treasury bonds, mortgage bonds, European bonds, our bonds look the best right now, even though they don't look very good. So temporarily, we're actually seeing lower interest rates, which is kind of contradictory to what we thought we would see. Right now, interest rates are about the lowest they've ever been. I wouldn't have everybody freaking out yet, that interest rates may potentially move substantially, but it is a very volatile time. On Friday, I saw the largest interest rate move in one day that I've seen in 10 years of doing home loans. So it is very much a volatile time right now, and interest rates do move quickly, but I wouldn't be freaking out about this whole downgrade, although it is a serious issue that needs to be fixed. All right, so second update, loan limits, FHA, Fannie Mae, Freddie Mac, loan limits in the Tri-County area, Placer County, Sacramento County, El Dorado County, will be decreased from $580,000 to $474,950. That is going to happen unless Congress stops it from happening. So our loan limits will decrease about $100,000. So to the consumer, if you're looking at homes, higher priced homes with higher loan amounts, I would look to move quickly to get into those home loans, because if you don't and want to get that loan later, your term will change and your interest rates will more than likely be moved up because it'll move into a jumbo category. Third, CO2 detectors. All right, so CO2 detectors now, per the state of California, have to be in all properties. So if we're doing a home with a loan, get the CO2 detectors installed prior to sending the appraiser out, because the appraiser is going to call for those CO2 detectors to be installed, and we're going to have to do a re-inspect. If they're not, and there's going to be an additional $100 to $150 bill to the borrower for the re-inspect. And there's nothing we can do about that. Appraiser's doing a job. Their job is to indicate what's going on with the property. If there's no CO2 detectors, they have to be installed prior to close, so the appraiser has to go back out to verify that they've been installed. So if you're doing a transaction that you know is going to have a home loan, get those CO2 detectors installed before we send the appraiser out to save our client some money, or a consumer borrower. And then finally, FHA flips. I've had a lot of questions about this. We do FHA flips. We do flips on VA, conventional, and FHA. What is a flip? A flip is when an entity like myself, not Bank of America, Wells Fargo, Fannie Mae, but an entity, a person like myself, purchases a home. Doesn't matter how they purchase it. Regular sale, equity sale, short sale, foreclosure, county courthouse steps. They purchase a home and then resell it within 90 days of their acquisition date. And it doesn't matter if it's at a profit or not. If they resell the property within 90 days of their acquisition date, it's considered a flip. Don't worry about it. We can finance them. But there is some nuances that you need to know about. On an FHA transaction, if the seller is reselling the property for over 120% of their acquisition price, we will have to have 2 appraisals and 1 home inspection. All right? The home inspection will have to be reviewed by the underwriter. Any health and safety issues or structural issues to the property will have to be repaired, replaced, or fixed prior to close. All right, so just know that. Got to have a home inspection. Home inspection's got to be reviewed by underwriting, and those items that the home inspector picks out need to be fixed before we close. Also, there's a second appraisal, so 2 appraisals, because we're in an area or a time where we're not really seeing rapid appreciation. So we have to have 2 appraisals to indicate why this property had a rapid appreciation in a market that we're not seeing rapid appreciation. So the appraisers need to be able to justify the large increase in value in a short period of time through either or a combination of repairs to the property or the seller bought it at a discount. Okay? If the appraisers can do that and the home inspection, all the items on the home inspection can be fixed, we can close them, and we can close them in less than 30 days. Our in-house underwriting is super fast right now. I'm closing FHA flips less than 30 days. I closed an FHA loan last month in 12 days start to finish. My average close time right now is about 22 days. So we're smoking underwriting turn times, and the FHA flips are not an issue. We just need to know. So when you get into contract, just make sure you let your loan officer know, hey, this property's a flip. All right, Keith Collins, Alpine Mortgage Planning. I know it was a long update. I do apologize, but I hope it was all very useful information. And just an FYI, I will not be doing an update next Monday. I'm actually going to be camping with some friends and family. So hope everybody has a great and productive week. If you want to get a hold of us, the phone number is 916-253-7820. That's 916-253-7820. Hope you all have a great week. Take care.